Hey everybody, good morning. It's Pete. Welcome to today's episode. It is Tuesday, March 31st. Welcome to the best stocks to buy today. My name is Pete Renzulli. If you find these videos helpful, I would really appreciate it if you can click down and subscribe so you can get future updates. I want to start out, we're definitely going to talk about Apple today. It has a very interesting setup today, but I also want to start out with a stock that was asked to be reviewed by, I want to make sure I say the name correctly. Arman Inder. If I said your name improperly, I apologize, but I want to make sure that anybody who takes the time to post that I mention, if possible, that we get to a stock. So Arman Inder, you actually brought up INO, and I want to use this as a very quick trading lesson before when we get into the charts. So we're going to do it right out of the gate. So let me share the screen here, and first thing I want to do is talk about where we are in the market. We're actually trading higher again in the futures overnight. So actually getting follow through. If you remember yesterday's video, we discussed the fact that the market was coming out of a consolidation and we were looking for momentum to start. We actually had a kind of a slow grinding move higher during the day. So we were correct on, actually, I want to take that back. Interesting. I want to take it back. We never want to try and be right or wrong. So let's get out of our vernacular being correct, because correct means you have an opinion, and sometimes when that opinion doesn't follow through, that's when we end up taking our biggest losses as traders, because we're like, no, we're right and the market's wrong and I'm going to hold the stock because I know the stock. Get that crap out of your head. Our job is to find the best odds of following through to justify the risk. So we have to justify the risk in exchange for the potential profits that we can be earning. So yesterday's game plan, we got a whole bunch of if-then scenarios based on what the market was doing. So we broke down the SPY, the NASDAQ, the Dow, looked at a couple of strong and weak sectors, and we decided that we wanted to be long yesterday. And if certain scenarios unfolded above the opening price, above the previous day's close, all of that kind of argument, and then we'd have to look at profit potential. That followed through yesterday. We got a strong close, and we're getting a stronger, higher opening today. But I want to get to the stock that was requested. Remember, we're also going to talk about Apple today too. So the stock that was brought up was this one, INO. Now, here's the key. I don't want to make a call on the stock, because to me right now, and this is the way that I would normally do it, if we were trading in my office in New York City, and for those of you who don't know my background, I had 2 trading firms in New York City. We had 300 traders. If I was guiding you to learn trading strategy, to learn what a great idea is, okay? A great idea is one where you believe the odds of following through are greater than the potential risk. So you feel that it's a good opportunity to put money in harm's way because the probability of follow through is really good. So in reference to this stock, now I believe the question was, do I believe it will get above $10 or something along those lines? I want to reverse the question into kind of a very quick trading bit of experience that I hope that you can take into any trade that you make right now. To me, the stock is not doing anything. It's in an area where it exploded. It was doing nothing, pulled all the way back, raced higher, came all the way back. This stock does not have any consistency to what I would call the smart money. Now, I want to define smart money. Smart money basically means the power behind any stock or any stock market movement that is greater than inertia. So in other words, some group, it could be hedge funds, it could be banks, it could be all of us combined. That's what I call the smart money. The smart money is who's in charge of that stock right now. Right now, nobody's in charge of the stock. And when somebody tried to become in charge of that stock, it raced up, came right back down, and now it's still in the middle of nowhere. I only want to allocate capital. Me personally, I want to allocate capital where I feel like I have an edge, where there's a really strong probability of something happening. And if it happens, great. If it doesn't happen, that's okay too, because that's a part of the probability. So in this particular instance, I understand why somebody might be trading it. I understand that it's a pharmaceutical stock. I understand the potential for explosive moves. In the short term, now I'm not talking about long-term investments what the stock could do in the future. I'm talking about right now. If we were in my office together, I would say there's nothing to do in this stock. I just want to be clear on that. There's a difference between what could possibly happen because of the potentiality of an explosive move versus something's probably going to happen. It's our job to uncover stocks and know what's probably going to happen, but what we're definitely going to do. So it's our job to flawlessly execute when we get a scenario, right? So that's my opinion on that stock. That's my bias on that stock. And I know I said don't have an opinion, so that was a slip of the tongue, but keep that in mind. Does it justify accepting risk because there's a strong probability it's going to move in a particular direction? Write that down. It's very important. So a couple of really good calls from yesterday. Chewy, we actually discussed, if you remember, we actually broke through this level. We said we want to see if we can stay above this level. So we kind of had an indecision candle there yesterday. So what I'm looking for is I'm looking for the stock to consolidate a couple of days above here. And then if you remember yesterday, we also said, how do you determine your profit potential? Generally speaking, we look to the left and see what the normal move in the stock was. So 26 to, let's say, 33 and a half. So roughly $7.50 would be the move that we'll be looking for in Chewy past that level. Another one was Citrix Systems that was called out yesterday. Really nice job as well. We noticed that it was well bid after this bullish U-turn candle. We said above 128 was awesome. Another well bid day. And this is actually a really powerful lesson as well. There was no reason to look at anything other than a spot to buy in this stock yesterday. So if you were day trading the stock, we actually, you'll know what I normally do is we put the opening price there and we look to see where it's trading from the opening price and really never look back the entire day. It was a question of what happened when it paused. And here's the exciting part. When you really start to know your price levels and you learn to read the tape, you start to pay attention to previous day's high, previous day's low. And again, this works on intraday charts, daily charts, weekly charts, monthly charts. It doesn't matter. You start to read the tape and you say, what number matters here? If it holds this level, if it breaks this level, what level should I be paying attention to? Well, if you missed this move and missed here, pulled back perfectly twice, held what was the previous high. And again, I used the high where it actually traded. I looked, what was the price that had a hard time staying above or couldn't get through? And to me, that was this level, beautiful pullback, and you could have held that into the close. But I don't want to get into intraday charts here. I want to talk about stocks that we could actually take a look at. So a really nice call again yesterday, and I know Amazon is an interesting one, obviously in a lot of news right now. They're actually picketing or boycotting, whatever you're calling right now, the people that are actually working for Amazon. So you can see that we're at this $1,975 level. If we could punch through that level, we got some decent room to go. We got minor resistance here, all the way up to 2,100 would be the next level. This would be the first target that I'd be looking for. Let's see, DLR actually was a really nice explosion. What's kind of interesting here is we had a breakdown inside candle. If you're a regular watcher, viewer, subscriber, I hope you are. We talk often about breakouts and breakdowns that fail and that are followed by an inside day. And that technically traps people, because what should happen on a breakout is you should get, in the case of a breakout, you should get well offered following that and follow through if the breakout's real. In this case here, we broke down, went inside candlestick, and then went 1, 2, 3, 4 well bid days in a row. So I'm looking here, the same thing that we're looking at in what we said about Chewy before. Now that we finally closed above here, I like the long, but I want to see it proof, because last time I got up here, it failed. Got up here, it failed. Couldn't get through, and now it threw again. So if it stays above that level, I like the long, so I'm looking for it to close above there more than one day and stay there. And even in this one here, it immediately failed. So the way this stock has been trading is having a hard time at the 136 level. So if it stays above there for 1 or 2 days and closes above there, that's the key. That's going to look to initiate a new long. But I don't like it here long now because of the times it fails there and the fact that it's only 1 day above that level. But keep it on your radar, very important. Something else from yesterday is the healthcare stocks, just from a 1 day perspective, were very strong yesterday. But I want to run through a few charts. But before we do that, I want to get to Apple, because I promised that we were going to take a look at Apple today. As you well know now, Apple is setting up as one of my favorite trading strategies of all time. It's so simple. It's easy to spot. Bam, when this happens, you get volatility, which is what we talked about in the market yesterday. Apple is actually traded into an inside day. So inside means consolidation. Out of consolidation comes an expansion in volatility. Remember, the game plan with an inside day, especially today, inside day, excuse me, is you're not calling direction. So we're not calling long or short. We're going to let the stock tip its hand. Generally speaking, we have a trend day coming out of the inside consolidation that you can hold to the close. And if you don't believe me, that's exactly what we had in the SPY yesterday. If you remember yesterday, we said the SPY looking for an expansion in volatility. We didn't really get massive volatility, although we did get follow through today. But here's the key. The key is it was an opportunity to hold the stock to the close not get involved in all the wiggles and jiggles and 5 minute this and 5 minute that and tail here. And the trade setup was looking for a trend day. I was very clear about that yesterday because it was preceded by a consolidation, which leads to an expansion. Today in Apple, we have inside day followed by inside day. We're not calling long or short, but we are going to look for a large red or a large green candlestick coming out of today. So once this thing breaks, hopefully it'll be a clean break. Clean, I mean that we open and just start trending, and where the opening price and the opening range is very obvious, and then you could trade. Now here, I just want to come back very quickly. Inside day trades, inside day breakouts, inside day setups, like Apple, inside is a 1 day strategy. Now you can tend to get good, well bid or well offered coming out of it, but if you get a really solid trend day without an obvious order flow heading into that, so there's no really good bullish or bearish price action heading into it. And remember, we're looking for the more money that gets spent prior to our signal, meaning are we trading 3 days worth of momentum, and I'm going to show you in the healthcare stocks next, or are we taking a look at where there's nice order flow, consistent buying, and small profit taking over weeks and months. The more obvious more money was spent on that stock, the more confidence that you can have that it's going to continue. So that's why I call it order flow instead of just saying trends. I want you to think behind what actually caused that price, right? What's going on? There's real orders behind that. So when you're looking at it, how strong is the order flow? How long is the order flow going on? So in Apple right now, I'll go back to the chart. We can see that we're only talking about the most recent price action, and there really is not bullish order flow, but there is bearish order flow based on what's been going on in the world. So Apple are looking for an expansion in volatility. So again, I want to talk about healthcare stocks, and this is a good example as well. I'm going to rattle them off because I'm just going to use them as an example. Okay, so we got Cigna, and you can see obviously the stock was strong prior to what was happening. It was actually at 52-week highs, so you can have a bullish perspective on that. And you can see we also went inside and up, right? So if you think about it here, inside candlestick into a big green trend day. That's kind of what we're looking for. So it's actually a good example of this. I'm going to rattle off a few more. J&J, you'd make a decision. J&J would not be on my list because it's having a hard time at 134. I like Cigna a little bit better there. Merck as well. And again, the point I'm making out here, and I'm just going to rattle them off, BIIB, you need to go through the list yourself. BIIB does not have as good a potential as what we're looking at before. It's Cigna. So the point that I want to make here is, and I'm going to come back to the screen, we're going to finish this up for today. The point I want to make here is whichever of these stocks that you happen to be taking a look at, Apple's a good example there, and these healthcare stocks, they were strong. Cigna had 52-week highs before we started to break down because of the global pandemic. You need to now decide which of these stocks have the best well-bid price action, close the strongest, best volume, and which ones have the most obvious room to go. So the profit potential justifies the risk. So we covered a bunch of stuff today. Thank you for the suggestions. We had a few of them come in. Take a look at that I know one that we talked at the beginning of the video, because again, it's our job to put money at risk because we believe there's a strong probability of follow through. Just saying a stock has explosive potential, or just saying I could see my stop loss, which a lot of people do in a trading range, that's not a good enough reason to put on a trade. That just means you could manage the downside and see your risk. That doesn't mean that there's profit potential. There's a monster difference between the two. Okay, you want to manage your risk in the context of you could make money. So just a stop loss or just the fact that it's a pharmaceutical stock doesn't make it a great trade. So if you really want to elevate your game, you need to have a strategy that has your A+ strategy, because there's a good chance it's going to go in a direction. Good chance it's going to go in a direction, and then you manage risk. Everything away from that A+ trade, you start moving away from that, and those are the reasons that you don't get paid on a regular basis. Stick to those A+ trades, let the probabilities follow through, and that's how you end up taking money out of the market on a weekly, monthly, quarterly, and annual basis. So thank you so much for joining me today. Thank you for watching today. We'll have a new episode of Stocks for Breakfast out in a little bit too. So hopefully some of these ideas will be something you can take into the day today too. Have an awesome day, and please subscribe. Thank you.